Thank you for your time. Could you take us back from the beginning when you opened doors to companies to invest and raise capital on the local market, either domestically or internationally? Take us through how the Rwanda Stock Exchange has evolved. Give us a perspective in terms of context, how it started, why the government chose to initiate the capital market, as well as how it has grown in terms of numbers.
Well, thank you very much. The market, if I put it in perspective, it was thought of during the early 2000. It was put, the feasibility studies took place around 2004. Then the government approved the plan in 2005 to create a capital market for a good reason. Basically, was to supplement our financial sector and to make sure the economy is able to raise long-term finance domestically, and we are able to promote savings through the capital market by the general public, because we had very low savings levels and a big mismatch between the available financing for the economy and the ambitious agenda of the country to grow as an economy. So typically we used to have only the traditional banking system with a few insurance companies. Regulators were not even covering pension sector. So there were a number of issues that were happening, and also the legal framework for companies, regulating companies, was very precarious. So the Companies Act was to be created and so on, so that we all that happens, and we also improve corporate governance. Basically, the market was thought about to fund the economy, to help finance long-term needs of the economy, either for the government or also the private sector in general. And on the other hand, to foster savings culture and improve, or rather promote good corporate governance among the companies. So the creation was 2008. Of course, everyone knows when the market was launched in general, 2008, with two-in-one. Now there was a regulator and a market operator at the same time. We were operating an over-the-counter market with no companies, with no people to run the market really. No stockbrokers. We had to really reinvent the whole market to create it, and a proper legal framework. So that paved way for the development in general. So 3 years, about 2010, a proper legal framework was put in place to create to now regulate the capital market industry, which saw the stock exchange emerge as a fully fledged stock exchange, and it started in 2011. So if you recall, we started with Bralirwa as the first IPO in Rwanda at the time. But before, we were doing a few government bonds, and one corporate bond at the time. That was a bank, BCR, which is turned into I&M Bank now. Then thereafter, that was in 2011. That's when the fully fledged stock exchange started, with Bralirwa as the first company to list on the market. Then Bank of Kigali came. They did an IPO also, and other companies followed. So today we are counting about 10 companies listed on the market. That is, it has 5 companies which are domestic, and we also have 5 companies which come from the region. Although there is one of the 5 coming from outside of the country, which have done close listings, which comes from South Africa. So we have companies from Kenya, and one company in the health care sector, which has come to the market to list to cross list, because it's also listed on Johannesburg Stock Exchange, and they're in healthcare. So their aim is to come to the market and also be able to raise further funding to expand outside of South Africa, but having a base here in Rwanda to serve the Rwandan healthcare system, the whole value chain actually, and the rest of East Africa, but using Rwanda as a base, as we have developed now a financial center and a services center, and that there is the right environment to do such businesses in the country.
Interesting.
Yes.
So at the moment now, 11 years down the line, what have you managed in terms of volume, managed to raise? What's the value of the market now?
Right now, I could say that the market capitalization of the stock exchange is about $3.6 billion. That is in equities. You know, the securities listed on the market. Minus, we are not including fixed income. If we add fixed income, it can go all the way to almost have $5 billion. So that's the in terms of the value of what is listed
what's
here.
The ratio of that to the local GDP?
Without including the fixed income, it's about 32% of GDP in equities alone. Yes. So if you add the fixed income, it becomes much more, close to 50%. So that's the value of the securities listed here, which exchange hands between people.
Contextually speaking, that means 11 years, 10 companies, you could say maybe an average of at least one company per year. Maybe it's not exactly what happened, but when you look at that trajectory, is this what you planned, or the number of companies listed are not as you expected?
Well, in our plans, normally we expect, without overstretching ourselves, we basically aim to have at least 2 companies listed on the market every year. But the realities become something else. It's one thing to create a good framework, but it's another thing for companies to come to market, because most of the time it's the issuers who decide to list or come to use the capital markets to raise funding. But it's not far off from what we observe in other markets in the continent. Doesn't mean it's good, because we should not be looking at Africa alone. We should be aiming at higher and better markets. As Rwanda, we as a country, we always aspire to be or to work to be the best in everything we try to do. But the reality is such that on the continent, really, an average listing on all on the exchanges in Africa, per average, we've sampled recently about 10 countries, including the biggest ones, as old as 140 years old. That's Egypt and South Africa, which is 136 years old. Even Nairobi, which is more than 60. So the average really in the smaller ones, East Africa and the larger Africa, the average listing in African exchanges is 1.4 companies per year.
1.4
today, as we speak. So now, on average, so if
very close.
So if you look at if you remove those markets which are bigger and are oldest, north of 60 years old, the average listing is 1 company. So that shows you how much we have to do as African countries, mainly not only Rwanda, because we have a lot to do. So I wouldn't say I'm happy, but comparatively to our counterparts, we are not far off from them. So we are more or less the same if you look at that. But if you look at market capitalization, for example, it's another metric to look at. Among our peers, I think the biggest on the continent, so for the biggest country stock market by market capitalization to their GDP, as a percentage of GDP, I think it's Botswana. They are at 250% value to their GDP, followed by South Africa, I believe, which is at 232, around there, and then Mauritius, which is at 62% value to their GDP. So in East Africa, we come in first. Rwanda is at 32% to our GDP, followed by Uganda, I believe, which is at 10%, and Kenya and Tanzania follow. They are about 8% to their GDP. So what the story this is telling is this. The story it's telling is that our companies, our economies, are not utilizing the capital markets as an option for raising capital and listing their shares or their bonds.
What do you think is the cause?
Uh, well, I think we have um, more or less similar issues. Competing interest, that's number one.
What do you mean exactly?
There are competing interests from foreign direct investors. You know,
Shareholders,
uh, the, the,
interests.
the, the fear of disclosure sometimes. Financial literacy, another one. But we also have private equity and venture capitalists. So there are so many people who have a lot of money who bring it into our economies.
They want it all.
FDIs, you know, the even some development partners, they inject money. You see the World Bank, you see IFC, you see all these other people with large and big pockets, funding some of the so in the banking sector, of course, but our typical business owner on the continent, I mean, for that matter, in Rwanda, does not really look at the market as the place to raise money from. Some of them fear to share of their pie. Others fear the unknown. Others are afraid of costs associated, perceived cost. Actually, if you analyze, you realize that actually at the end of the day, it's not the market which is expensive, really. It's just the perception. But the issues of disclosing come in most of the time first, or fear of giving up control of their companies. But we have governments that also sometimes, when they are privatizing, they take their shares or their companies into private hands without necessarily using the capital markets. So it's a general concern for most of the exchanges, and including Rwanda. But here there is a policy of government that has been there for some time to try to privatize through the capital market, although it has been slow, but we hope to get there because there's still many companies that could be privatized or prepared to give some of their shares to the general public.
At some point in between, just shortly before COVID, you had a project initiative to mobilize SMEs to list. What happened? How was the result? Could you take us through what happened? What
I believe
transpired?
you are talking about the investment clinic, the capital market investment clinic. It's a project that came from us realizing that the market is not addressing necessarily the issues. Of course, if you look at our economy in general, is 85% at least they are SMEs. Many of them are even micro SMEs, but the bulk of companies are in between that can have a good size to utilize public money. Yeah, so we created a platform in 2018 for small and medium enterprises to market segment at the stock exchange. We have the main market segment, but we also created a market segment for small and medium enterprises around 2018 to try to tap into that niche of SMEs and other corporates which are not joining the market by lowering some of the requirements, but of course by not compromising the good practices, governance, accountability, and profitability. So we put that in place. And while we started approaching the smaller medium enterprises, we realized that there is more to that. It's not about money necessarily all the time.
What is it about?
It's about actually the money is there. It's not. It's about the investment readiness actually. So you find that many of the companies had plans, but plans which are not well elaborated. Businesses which are not necessarily sustainable, good corporate governance or quasi non-existent, books were not really kept according to best practices.
And
So
you were expecting all that stuff from SMEs.
exactly. So we are not expecting that. Really, we have to be realistic ourselves. We are not alone in this game. But when you have different fora, access to finance always comes to mind. There is no money, but I can guarantee you there is a lot of money in this system. The banks have money, DFIs have money, private equity guys have money, and the larger public has money. But the issue is, how do you access it? So everyone has their own requirements. So by digging deeper, we realized that as capital markets, we have to play our part in trying to support the SMEs. So we came up with this project of investment clinic to try to support companies to be in their investment readiness. Basically, we are trying to create good corporate citizens. So the project, we started it around COVID time. Unfortunately, COVID hit. We targeted about 45 companies in the first cohort. Of the 45 companies, only 12 made it to the finish line. Unfortunately, even those 12 who made it, sometimes along the way they drop off, or they are not able to pursue what we are trying to help them with, to assist them with, or to work with them. Because for business owners, you find quite often they are in hurry to get their cash. They want money to go and do their business. But whereas the public money is not a joke, you have to really use a serious scrutiny and so on. And so that process, it's very, very rigorous. We've been able to profile only 3 companies in that first cohort. But the first 3 companies we profiled, 2 of them have already applied for. No, actually, it's 3 of them have already applied to raise money in the market. So we expect 2 of them to list anytime soon. There are securities on the market, and the second cohort has started, and we are also gaining some more. Actually, there's 1 company that has already raised money from the first cohort, and we have 2 more which are in the process of now raising, the phase of raising money. So when you get to the point of being profiled, that means you are investor ready. So the stamp of approval we put here, because we use our entire ecosystem. We work with the Capital Market Authority, we work with the different service providers, that is advisory services, legal, accounting, accountants, and financial advisors, to prepare companies to be investor ready. So it doesn't mean necessarily a listing. Because our aim at the end of the day, the stock exchange is not really necessarily a platform for trading. It's a platform for assisting people to raise money. So at any stage of development, so that these unquoted securities that we can have assist companies to attract investors, so that investors can find clean companies that are good corporate citizens. So we have hope in the investment clinic to give us a pipeline of companies, but it's mainly on the SME market size and some other corporates, but not necessarily the big companies. And the campaign continues. Yeah.
Oh yes, you have hope. That's a good thing. And when you read the Rwanda Stock Exchange, so rating the Rwanda Stock Exchange regionally, continentally, and then globally, considering whatever factors you think are important to mention, how do you rate the Rwanda Stock Exchange? 11 years down the line now.
Well, that's a tough one, because there are different metrics people go by. We were just mentioning about our market capitalization rate now. In the past, today, as we speak, in the region, we come in number 1. But if you compare ourselves to the other regional exchanges also, you realize that there are many. We are faring the others, because we all have similar issues. Of no uptake, not enough uptake, liquidity issues, few companies to come and list. But I would say that we are on average. I would say that we have come a long way, I guess, but we still have a lot of work to do. If you look at the number of listings, we are comparing it with our peers, which is not good, because we are comparing with peers who are not good either. So I wouldn't tap myself in the chest to say, we are all there. But in terms of liquidity, is not enough. We don't have enough investors. Retail investors are very few. And institutional investors, we are only limited. We can only have a few, so far. But the market is deepening, day by day. We've hit a few records of recent. We've started issuing a few innovative products, sustainability-linked bonds, for example, by the Development Bank of Rwanda last year. It's the first one in this region. We have now just approved another green bond, which is also the first one from an SME in energy sector, and there are others which are coming. So we hope to leverage on a good legal framework we have in place, and the Kigali International Financial Center, which is progressing quite well as an ecosystem, but it has now to translate into what we do, so that by attracting different funds to come to market, we are seeing more interest now from different service providers in the financial services who are inquiring, who are registering to be part of this ecosystem, and we hope to build on that, to gain some more momentum. But in terms of performance of the market itself, it has fared very well, actually. I would say that in the past few years, we have been very resilient, whereas most markets have gone down in terms of trading. In terms of their indices, we've had last year, most of the markets in the region went down more than 20%. Their indices, whereas our index has remained resilient. It actually went up. Even this year, we are up around 3%. It's not really that big, considering the issues happening across the different markets, the inflation, economies which are dwindling, but the Rwandan economy remains resilient in a way. So we've just had 8.3% growth, for example, for 2023, and we've seen credit to private sector increasing. So now we are also seeing some interest on people who are trying to look at raising money through using bonds, and we continue our campaign, working with our different stakeholders and regulators and policymakers to sensitize the issuer side, because you see, at the end of the day, liquidity products come from both sides. Liquidity comes from the supply side. You understand? So the demand side, the products, which are the securities that come to market, come from the supply side, which is the issuers. So now, as we progress, we need, I think, more support, I believe, or buy-in, actually, from different stakeholders. That includes the regulators, that includes the policymakers, and a mindset change in how we do and think about business. I don't know if you look at the landscape of our financial sector in Rwanda today, we have very few indigenous financial institutions. Most of them have either been taken over by someone else coming from outside of the country, because of the nature of the businesses. So I think others, people who come to raise money, or people who create businesses in Rwanda, they are not strong enough financially, so they need to either borrow from banks, or they just get funding from elsewhere, but they are not using the market. So I believe the mindset change has to be there. We must work a lot hard, but also there has to be some policy changes, deliberate actually changes for policy direction to either compel or use moral suasion to see how we can bring on board public utility companies, for example, the banks, insurance companies, transport companies. You see, at the end of the day, when you are providing a public service, I believe you should think about also giving up some of the ownership in the company without losing control, because most people are afraid to lose their control. But you gain also from joining the market and enjoying the benefits the market can offer.
I see.
Yes.
When you look at the reality, you said it's one of the youngest, possibly even the youngest, not only regionally but globally speaking. What kind of technology are you using? How advanced is the platform that you're using to trade? Okay, well, at what level is it? Tier 1, Tier 3?
I would say, okay, we so far have not automated our trading platform. The trading is not automated, It's a project we've been running for a few years.
Are you
Yeah,
uncomfortable?
not really. The issue is it's a project we started, and we are working with other different countries. So we have different stakeholders from different countries, East African
So
community. The
factors
capital
of
market, yeah,
remaining
outside
is,
of our
they are
control.
beyond your control.
Yes, yes, but we have at least light at the end of the tunnel, because now the project has, which was marred by a lot of issues, which are more political than even technical. Well, you know, some people pulled out, others because of the funding mechanism which was available, funding was provided by donors somehow to fund the East African community.
So they would have a say.
So they would have a say, but most of the issue was with the partner states, not the donors. So I think it was us who were having trouble. But in the end, the project now, I think we are almost there. We actually target to go live before end of May this year. So in the next 1 month and a half. So now we are at 99% completion of the automation. So the automation, we see our markets linked across the region, but we also have Rwanda Stock Exchange launch its own trading platform, which will be electronic. But however,
That is to serve the domestic.
to serve the domestic market,
Okay.
which will also be linked to the regional markets. But what we intend to do in phase 2, you know, which will include also Kenya and the other markets that had slow to join the project. We are also aiming to introduce applications which can see people using or open their own accounts or access the markets either at the primary market level or at the secondary market level, or even being able to trade directly themselves with their phones, you know, or online, so that, you know, we become more digital. So, but the settlement process, the settlement technology we use, I would say is tier 1. You know, we have one of the best actually settlement process systems in place, which is centralized at the central bank, and it's part of and parcel of the entire payment system. So today, if you trade your securities, they can settle instantly if you want. But because of the structure of the market, we do T+2. So if you buy shares or bonds, they settle in 2 days. You have if you buy shares, they are in your name, and if you and your money comes to you at T+2. That means that from the trading day, the second day you get your money. So the ownership changes, but and the technology we use is very, very robust, actually, I must say, and the structures of the market we have put in place are very secure, and they protect investors 100%. So no one can lose their money through in that way.
Not bad enough. When you are receiving application and then the process of, you know, due diligence to a point where Breliro are listed as the first company with a share at 136 Rwandan francs, then it grew to exponential figures of 900 per share. Of course, other factors caused the decline and the process of splitting. What do you think drives or creates a spike in, you know, appreciating any particular company on the stock exchange, on your stock exchange? What are the factors that could cause a particular brand or a particular company, apart from normal business factors?
Okay, I think it's demand and supply. First of all, when you have an IPO, it's a new product on the market. If the market, if there is more demand, the shares go up immediately, for sure. But there is also the performance of the companies, the underlying companies. But typically, in an IPO, that's when companies really shoot, you know, and because most of the time you have less shares, you have less securities in the market, and more buyers. So that triggers speculation most of the time. By the most of the time, it's speculation. You know, more than even the real real realities on the ground. Matter of fact, you see companies sometimes they go up 3 times and then they go down again another 3 times before they can come back up. So you wouldn't
Has
explain.
that been the trend on the Rwanda Stock Exchange? That you have these fluctuations that
To
regularly?
a certain extent, I think, with the Bralirwa, for example, it was the first one to come and it was very well taken. So it was a very good period of growth, even for the economy and the markets across the globe. So that was before the crisis of 2015, where we had a commodity crunch across the globe. So there was a mini economic crisis across the whole world, especially in Africa, where commodity crunch took place, and most of our economies are really extractive economies. So the economies had issues, and the commodity prices went down, and it also affected the markets in general, because you see they are correlated most of the time. So now, when you saw that trend, it was a lot of speculation, and the company went up to 900 from 136. People made the money, but unfortunately, a lot of people go in when it's going up really fast, and before it comes down, people have gone in. So those who go in at that level, they have issues. But those who went in earlier, anyone who went into Bralirwa or Bank of Kigali in the IPOs, they are all smiling all the way to the bank. Bank of Kigali today is making more money than its own valuation when it came to the market. So when it was coming to the market, it was around $87 million worth. Today they are making that in 1 year as a profit. The company has grown. So they raised money in the market they raised more than 100 billion Rwanda francs in equity and counting. Bralirwa has raised money, but they at the same time they all grew and they keep giving good dividends. So we have good growth companies, but the share prices in Rwanda they keep to follow the trends of the Rwandan economy. If you know anything about Rwandese, they don't speculate much. So this economy is not a speculative economy that much. Yeah, that's what I see. Because you don't see things shooting up and then coming down. No, things go slowly, but in one direction most of the time. So that's what has happened in the economy, and the stock exchange has reflected that. But of course, because we cannot ignore the fact we don't have a lot of liquidity in the market due to the few numbers of our retail investors or people. So we don't have really a large investor base. So the campaigns of public education, both sides, for the issuers and the investors, has to be there. And even institutional investors must be, must push more than they are pushing today, even to support the secondary market, because you see the tendency we have here is that one of buy and hold. So if you buy and hold, things don't go up really that much, because there's no constant demand. But since we are seeing our fund management industry emerging, we are seeing some trends actually. At least we have transactions every day. Of course, if I tell you, in the past few years we've traded about 200 almost 220 billion in the secondary market. The bonds market, it's liquid. We don't see any bonds outstanding at the end of any trading day. So they trade every time. So every bonds that come to the market, they get bought. The shares are the ones who delay a bit because of the liquidity matters. But we see the trends improving now. Yeah.
When you look at the quality of trading on your platform, what kind of observations have you made over the past 10 years?
Well, I would say that trading has been steadily increasing. Actually, we've been having positive trends.
Cutting across all listed companies?
Yeah, not all listed companies, not all counters are active. There are only a few that are very active. Bank of Kigali, Bralirwa, MTN. Those few, the domestic ones are very active, because it's a primary listing. Some of those cross-listed don't have really much float in Rwanda on our market. That's typical. So when you have a cross-listed company, most of the liquidity move to the more liquid market, basically, especially if it's not the primary, if the market you have is not the primary market. So but in general, the trading activity has been increasing over the years. it's rare that we have less than 20% increment every year. Sometimes we have doubled what we've done the previous year in trading and in counting. So the more we have fund management industry emerging, we have more institutional investors, collective investment schemes that are coming and emerging. The Asia Hazer, the Aranite, Agoka Fund, and more funds are being created to support the demand side of the coin. I think we are going to witness more trading activity on the market, but the mindset has to change among Rwandans. The same way people are going for gaming.
Whose burden is it?
Well, it's not mine alone, or my colleagues. It's not the capital market.
What do you mean by colleagues?
It is my colleagues. We work together. Don't work alone at the stock exchange. So there is a capital market authority.
Brokerage firms.
Everyone. Brokerage firms, that's what they do for a living. They are every day going somewhere to look for business. Myself and my team, our team here, we are always doing the same thing, but it's not easy to penetrate so far. But so that's why I'm saying it's not our job alone. It's also policymakers, regulators. The Rwandans themselves must change have a mindset change, because I've seen some countries we are buying shares, like in India, you have 300 listings in 1 month easily. Actually, you don't even know how many companies have come to market. So, but now, like we have seen here in Rwanda, average listing per year, it's one company, maybe not even slightly less. On the whole continent, same thing. Doesn't matter whether the companies or economies are big or small, we are all experiencing the same. So, unless we do what Rwandans do.
What is that?
Rwandans do everything. The Rwandans, they are a resilient people. Rwandans are determined people. What we put our mind to, we will do it. We excel. You know, if you look at how we've been resilient in the past 30 years, we are now at Kwibuka 30. If you see what we've been able to achieve in these years, I think the capital market should not be left behind. People should also embrace the culture of saving and making sure that we own our own assets. Because if we keep continuing this way.
Now, speaking of saving,
yes.
When you look at disposable income within the pockets of Rwandans, broadly speaking, compared to how active or less active the market is, what observations have you made?
Well, Rwandans are not rich, individually. I could say, there are some people who are very rich, by the way, I have to say that. But I could also say that we have an increasing, you have to look at the numbers. Like they say,
Rwanda is one of those, like in terms of GDP.
We've been progressing over the years. We've come from a wrong way. 200 in lower middle income. No, sorry, we came from 20 years ago. That was at 2000. Yeah, so we came from 200. Now we're at $1,000. Right? So that means that it's a miracle for a country like this. So what it means per capita income.
But that doesn't mean that that's enough for you to see active trading.
It is not enough to see savings the way we want them. Because the proper saving is to channel your savings into financial instruments, the financial services. Why? It's also good to save in land. You can buy property. Oh, okay. You can do all those other things. You understand? But the best way normally is to use financial instruments, because the resources are allocated to the most productive sectors of the economy. You understand? So now, RSSB is not even at 10%. The pension. 10%
of what?
Of GDP. Okay. People who are supposed to be saving for their pension, they are not even 10%. The country at 16% savings level to GDP can't survive, cannot continue this way.
What do you suggest?
I suggest that we go to the target we have given ourselves, 30%.
Which one is that?
30% to GDP.
What?
Savings level. That's the only way we can make progress and achieve the objectives of in NS21 and achieve the objectives of getting Rwanda to a middle income country properly.
What would it take for that to happen?
It would take policy and collective effort. Definitely. because it's
those are
possible.
political statements.
Exactly. So what it will take you and I
Uh-huh.
to know that before I go to the bar,
Uh-huh.
after I get my paycheck, I take my 1 or 10% or 20%, whatever I do, any income you get, you put aside your money. The Chinese and Indians sometimes, yeah, most of the time it's the East Asians who save most in the world, yeah. People, I see people laughing at them. You see Chinese, they are living in a house. They are like 10 of them in one house, or they even take turns, to sleep, right? But they are saving the money.
I hope you're not prescribing
No,
that way of lifestyle here.
No, I'm not proposing that, but I'm saying that saving is a culture. Saving is not something that it's a culture. It's a mindset.
Okay.
So if you
We're
think
not
that
business people, basically.
we are, no, it's not that really. It's we are illiterate.
Okay.
I would say financially
Okay.
illiterate.
Okay, so
That's what I would say.
now you're dealing with an issue of financial
Exactly, financial
literacy.
So now,
Okay.
if you are able to know to save, saving is not really to be rich. No, it's a culture. I'll give a very simple example. How many businesses are born? Most businesses that are created here, when you see in town, it's bars and restaurants. Even the government now has even imposed hours of not drinking. So you are telling me Rwandese don't have money to save. You understand? So you can't do that. Actually, if there is a deliberate move and policy
That's
or
interesting,
push or
interesting
drive
overview. So you're
to do
saying,
that, yes.
some policies increase or create or trigger
Behavior
a
change.
culture, a behavior change
Yes.
where
Campaign
you
policy,
see
yes,
disposable income
Yes.
volume increasing, and then people can save and then invest.
Yeah, we have seen in the Wimina. People have Wimina all the time. And people have cooperatives. People in cooperatives, they work very well. You have seen during COVID, people who are saving, their saving societies, they survived for a few months when we were closed down, right? So the culture is slightly changing though.
Are you happy with what you have achieved over the past 11 years?
I'm happy.
Looking at your capacity and then the plan, the vision you had, and the resources available.
Well, I could say I am happy to a certain extent. I mean, if we are covering 30% to GDP in market cap, if we have been able to, the market has been able to raise $1.45 billion and traded another hundreds of millions of dollars, it's more than $2 billion that have passed through the market. So it's a good achievement, but it's not enough. We need to increase our capacity. We need to increase our mind.
What do you need? Looking at give us an idea. What would it take for you to leapfrog?
Leapfrogging, it would take a collective effort. A collective effort means beyond the borders or beyond the walls of the stock exchange or the capital market authority or the Ministry of Finance. It should be in everybody's mind, the same way kids nowadays are singing Ejo Heza, one laptop per child, mobile phone for everyone. Every household should have an investment and savings account.
In your context, how?
In my context is that if someone, as long as you save your money, it will end up in a bank.
Okay.
You understand? So, as long as you save through Ejo Heza, the money will be invested through government securities or any other securities, right? So, and that money will be deployed into the real economy to build roads. You understand? Hospitals or other businesses, and that money is banked in the bank, and people are employed. The taxes, all that stuff together. As a matter of fact, actually, what we do is not different than what the Revenue Authority does, because it's all being deployed to either collect revenues from taxes, which is again deployed into the same economy, or what you save in your disposable income, you save it into your bank, or you take it to your broker, your pension, wherever you take it. That money is again deployed in the same balance of the same economy, in the same balance sheet of the same economy. So at the end of the day, the key aspect of this, the key lesson here is savings and savings and savings. It doesn't mean to save everything you have. It's not possible because we have a lot of obligations at home. You have to put a roof on your head. You have to put food on the table, pay school fees, all that stuff. But before you do any of that, actually, we should think about saving some, because it's possible. Because the societies that save most, they are not the richest necessarily. They are the ones who are savvy more than the others. You understand? So that's very, very crucial.
But their credit rating is
yes, the Japanese, you look at the people in East Asia, they are all they are the biggest savers out there. Some economies save up to 38% of their income. You understand? It doesn't mean they are the ones who make more money. No, actually they save more than the others. But they are industrialists. They have technology. They have all the goodies you can have. They are investing in our own economies or in America or elsewhere. So that's very, very crucial as we try to develop. But on the other hand, also we must get in our heads that this is actually a national security issue.
Okay.
Definitely. Save, okay? You cannot say you are a free country if you are not financially free. Whoever gives you money will be owning you. You understand, in your thoughts. So now, if we don't save and invest in our own economies properly, domestically, because those savers out there, they also need their money in their countries. So now, if we do develop our own financial independence, no one will be coming to dictate policy and things they always come to tell us all the time.
On paper, let's go back to the original, the clinic you were talking about.
Sure.
What can you give us some 2-3 examples of some of the criteria for listing, apart the whole process of due diligence, the coaching and all the preparations, but is there, for example, a threshold income or value?
No, okay, we ask companies to maybe have at least maybe 50 million in revenue. In revenue, not assets. We don't look at assets really as such.
50 million.
You could have an idea with no assets.
That you're not allowed to.
50 million, yeah. I mean, you cannot. We don't have. It takes more time and energy, and most of the time companies like that need other. They have other institutions to take care of them.
Why
yes.
would you put it at 50 when you are, like you said earlier, the largest majority, 85% of local businesses registered with Rwanda Development Board are small and medium, or even small and micro, something like that.
Yes. So I'm glad.
Why would you raise the bar to 50 million?
At least 50 million. I can't remember exactly, but it's around there. Because you see, I'm glad you mentioned the word micro. When you're micro, there's microfinance. You understand? And other instruments, other instruments in financial institutions, NGOs, and other institutions that can be able to support those small businesses. So basically, so for us, we go another step, or to another level for them to be able to be supported. Yes. Low savings level in the country. We also have resistance. The buying is not really there yet enough, but mindset is changing slowly. So technology is coming. The legal framework, I can't complain, but the challenges sometimes are regulatory, but those ones that we overcome them over time. But in general, there are those. We need more uptake on both sides, the supply side and the demand side. And also, of course, I will not go without saying that we have to upskill our people, because the financial markets are not known by everyone. Even professionals need more training, professional training, and upscaling, of their knowledge in the industry. I wouldn't say that all is rosy, so it's not. That reality is such that it's not. So we have a lot to do, but we definitely have need to. We could use more support from all Rwandans because the market is for everyone.
Tell me, why is it that largely every time you have a company listing, predominantly the advisors tend to be foreign companies, advisors and caretakers of the listing. Why? Is the inability of local companies to handle such a...
Not really. I wouldn't say that. Typically when we're handling a large transaction, definitely most likely you are going to end up having some consortium, using some other skills or other transnational advisors, not from the country, from outside of the country, because they have, the investment world is about networks and connections mainly, right? So you need that sometimes, and our local intermediaries may not have all that, but most of the transactions they can handle on their own, actually. Yeah. So we have enough capacity, I believe, of our local service providers to handle any transaction. Even if they need some skill, they could outsource, but not all of it, because now the capacity has been built over time. But we need also our people to believe in our own capacity as Rwandese and market players, that indeed we can do that and be successful. We've seen the most recent example, the sustainability linked bond last year of Bank of Kigali. Although it was a short period of time, the transaction took place. They were aiming to raise 150 billion. It's a note series they are going to do over the 5 years to fund their projects, and the transaction was done fairly quickly, and also the subscription came from all kinds of people, retail investors over 100, even if the time was not enough. But the issue was it was all subscribed domestically.
Okay.
And others that keep coming. So I think the people should trust the market more, and if you look for debt, also think about issuing a bond. A debt is a debt.
Tell me, I'm looking at from your own analysis, what you prefer, an increase in local or domestic companies listing, or foreign companies in listing? Which of the two, looking at the market, the economy, would serve you better?
You have to remember first and foremost why a market was created. The market is created to help the local economy develop. You understand? That means to provide long-term resources for the economy, the domestic economy. That means I would like to see Nyirangarama, I would like to see Nyanje,
so
all these companies coming
more and more
exactly
local companies.
Because yes, more of local companies to embrace the market. Why? They are raising money in domestic currency. If they are doing a debt, it's cheaper. If they are doing equity, they are not bringing it. They are not going to be obliged to look for.
The reason why I'm asking this is, at some point, I think in 2015, if memory serves me well.
Yes.
President Paul Kagame was speaking at a particular conference on capital markets,
Yes.
right? And said he prefers capital markets, to foreign aid, right? He said, I'll get rid of foreign aid,
yes,
and embrace capital markets.
Yes.
Now, if we are to raise more, and even in terms of volume, more capital, what do you think? Isn't it better that we'll receive injections from foreign investors than mobilizing local investors who are small in size? I'm trying to see the rationale behind you preferring domestic investors compared to foreign investors.
Actually, you have misunderstood my statement. What I meant, I prefer developing domestic markets more than relying on foreign aid and all those other things. So the domestic market, it doesn't mean it's exclusive. Our market is actually one of the most liberal. Our capital account is 100% open.
You would prefer you correct me if I'm wrong. I want to get it right.
Sure.
That you get as many as local companies or brands
Yes.
to list, but open
raise funding.
but open the market for foreign investors to come and
Anywhere we
inject
shall.
and buy.
Exactly, that's our point. So
Okay.
when they bring those dollars, which we need, by the way, you know, they exchange them to the local currency. But the money we are raising comes in local currency, but they bring dollars if they are foreigners. You see what I mean? So
the
it's an issue.
to a point where you don't have a limit
100%.
in terms of percentage of how.
No, this market is completely liberal.
So if a local company lists, let's say, and mobilizes, let's say, is looking for $1 billion, you'd be okay with 90% of that coming from abroad.
Even if you bring Bill Gates, bring the check, they will not have a problem. Bring his own check.
Okay,
so the markets, of course, they wouldn't happen that way because there's allocation policy.
Okay.
You know, so
what does the law provide?
The law provides for ownership up to whatever you want to do, but the law also provides for protection of minority shareholders. You understand? So the moment you start taking an important step, shareholding in a company, you must state your intention, and we follow the rules of mergers and acquisition or takeovers. Sometimes people do what we call hostile takeover, which could end up, diluting minority shareholders, not only diluting them, but also not protecting them enough. So those are the checks and balances, but you are free to buy the shares in open market as you wish from anywhere.
Through prospects, looking at, you have everything at your fingertips. Maybe encouraging local companies or local brands to list, mobilize themselves and mobilize resources or more capital. When you look at the nature of businesses in our economy, do you see very good businesses that should be on the Rwanda Stock Exchange as we speak now?
Definitely. I will tell you this. As long as you have 100 shareholders, by virtue of having 100 shareholders in Rwanda, you are automatically registered at RDB as a public company. You are a PLC. If you are a bank, you become a PLC because you are a public utility. If you are an insurance company, you are a PLC. So 100 shareholders. That means the moment you get to a point you are 100 shareholders, definitely, it means that you are a good size. By the way, 100 shareholders can't be just small. You understand? But now, if you look at the numbers of Rwanda Revenue Authority, what they qualify as being an SME, how many are there? There are a number of them, up to 400 million, I think, francs. You are supposed to be a small company. Beyond 500 million, I think, and 500, there are so many other large taxpayers, you can't believe. But how many do you have listed? 5 companies. How many banks do you have? Exactly.
The challenges are those that you listed earlier?
No, that's not a challenge, because you see, when we are talking about that, you ask me about the size of companies, or if there are companies I see potentially that can list or raise money through the market. Everyone in the country is raising money. The biggest bank in Rwanda is Bank of Kigali. To get where they are, they had to raise 100 billion, and they raised it from the market in equity. So what does that tell you? So now the rest of the banks, for example, today, right? So they all come from, take EcoBank. They came in Rwanda in 2008, if I remember. It was 7 like that, or 5. I can't remember exactly the year. But at the time they were coming, it was a company called EcoBank, which is in West Africa. Guess what? This bank is listed. They did a listing in Ghana, in Togo, and other markets before they came to buy BCDI, a bank called BCDI, right? Yes. So look at Equity Bank, KCB, all these insurance companies, many of them that come here, they are typically listed elsewhere. This small company listed in London called Trasmara, they came to Rwanda, they bought BRD, right? But they did an IPO of $350 million, I think, if I remember very well, in London Stock Exchange. It's not even in the main market. They went in the Ames market, and they came on a shopping spree in Africa. What does that tell you? We can't do it. Companies.
What made them disappear?
I don't know. Those are their stories. But they were buying our shares here. BRD, they took it to BPR. They merged. Now KCB has bought that. But KCB is also listed in Nairobi. So there's a story about behind that. So now that means these banks we have here, some of them can be listed. Insurance companies, mining companies. We are always crying. Mining companies that don't get enough, they don't get actually treated well in our banking sector.
Right.
No one funds them. Okay, because the perceived risk, of course.
Okay.
But we
So
know
you
the
are
Toronto
encouraging
stock.
them to come over
You know what
where
makes
they have been rejected, and then they come to the Rwanda Stock Exchange and raise the
Toronto
capital.
Stock Exchange,
Ah.
right? Australia, London, Metals Exchange,
Uh-huh.
Chicago, Mercantile Exchange. What do you think they do? So those are places to raise money for mining and even exploration. So what prevents people to think about raising money and using the market?
I'm sure you have a clue of the political landscape. Are we safe to a point where this is a market that everyone should be like, whoa, I need to be in that market? Describe, politically speaking. We're talking about policy, we're talking about political environment, or know that instruments available. Is it one of the best markets to invest in?
Well, I would say that this market, we are lucky so far. I mean, we are living in an era, in a country, a region which is prosperous. It's going year after year in the positive direction. So the economy is growing. The underlying companies are all exponentially growing. They're all year over year. This year alone, Brairoa is giving 28 francs per share. They have declared a dividend. If the AGM approves soon, which they are going to have the AGM, if they approve it, they will be giving 28 francs per share to their shareholders. You know how much it is selling today? 170 francs. That means your yield is how much? If you buy that, you're having 16%. It's better than the government bond, for example, which is very popular nowadays, right? Bank of Kigali is making north of 100 billion in a small economy like ours here. So what does that tell you? So if you are in Bank of Kigali, you are making money. If you are in Bradua, you are making money. MTN, all these companies are the creme de la creme. We have all BBCs, banks, breweries, and cement companies. Now we have telcos. We have government bonds. So now if you own real estate project, you know return on investment in housing market, right? In the real estate, rental income is between 4 and 8%.
To what extent
to the value of your property. So now you do the math. If the money invested in the market works for you, you don't work for it.
Okay. We'll discuss the money market at some point, possibly in the next question. In the banking sector, government has a very huge foot to a point where private businesses are not the most attractive clients for banks, because government is picking a lot of financing from local banks and squeezing private businesses. What about in the stock market? To what extent has government invested or mobilized resources compared to private businesses or individuals?
I would say actually the biggest borrower in the market so far is government. Of course, we've had a few corporate bonds come to market.
Is that a good thing?
Well, it's not a bad thing, if you ask me, until it becomes it crowds out the private sector. You understand? But that time has not come, has not arrived yet, because you see the borrowing of government is controlled. The money, you see, if you look at the composition of the government's budget, allocated and approved by parliament, 60% is domestic revenue, 60% around most of the time here. You find another maybe 17% borrowed from institution donors. From bilateral partner institutions like the World Bank and the others, and the remaining is normal borrowing. So part of that is also borrowed from the market. I could tell you, for example, in the past few years, I was telling you, since COVID time, there were government bonds issued around 1.3 trillion Rwanda francs. That's issued in the market. It is bought mainly by insurance companies, the social security, the banks, even individuals. Today, we revolve around 8% retail investors who buy government bonds. However, they also buy other instruments when they come to market. So the private sector is not being crowded out.
Okay.
It's because they have not embraced. They go to the banks most of the time. So and then the issue of government using the market definitely is good and it's there, but it's balanced. So there's no issue of crowding out the private sector. If you noted in the last policy statement of central bank, I think a few weeks ago, credit private sector has gone again north of 33%, I believe. So it's on the increase again. It has slowed down during COVID time because of the obvious, but now the trends are coming back, which it's a very positive indicator for the economy in general. So that means the business are likely going to thrive if everything else remains equal. Yeah, and nothing drastic happens in the economy or geopolitically.
Give us a little bit more background of Rwanda Stock Exchange in terms of how it is run. Where do you mobilize your resources from? Who pays your salary? Who pays your rent?
Well, I must say that we are sustainable. Yeah, as a business. But we have two roles, of course, as you know. The first role is to run as a public utility to a platform for raising money and trading securities. But we also have the other objective, the other responsibilities rather, to run as a business so that we are able to pay our dues. You know, we pay rent, employees, we do that.
You haven't defaulted on some bills?
No, we don't have. No, we survive. You know, we have
That's
we
not
have
a good word. Do you survive?
We have it's humbly speaking. We have a strategy of growing organically. So start slow and you do what you can do, but
So
you remain.
Where do you get the largest portion of your resources to run?
Listings and trading and other services we offer. Yes, but yeah.
Do you receive any support from government?
No.
Not at all. You're
No.
private.
Yeah, we
Autonomous.
Yeah. As an institution, we are able to run. Yeah.
Who has influence over you?
What do you mean? Everyone. I'm a public servant, you know. So I serve the people, the customers.
Who would call you and give you some?
Anybody, any
Sleepless
shareholder
night.
in the marketplace can call and say what is going on, where is my shares. But anyway, we have a board of directors, which are appointed by shareholders, of course. Government is part of the shareholding, of course. But we have also the general public, to which we are answerable to. So I wouldn't say so and so has influence on me. Everyone does. Everyone is a must fear because I'm here to serve the Rwandese with my team.
Are you resourced enough? Are you facilitated enough to operate to a point of your maximum capacity?
Well, we are working on it. We don't have enough
answer is no.
resources. Yeah, the answer is no, but we are working on it.
Interesting.
Yeah.
Thank you very much, Mr.
Sure.
CEO.
All right. Thank you very much.
I hope to hear from you soon.
Okay.
And good luck with the good work you're doing.
Thank you. We are trying.